General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay, so let's knock this workout. Week 1 of July. July 1st. News for tomorrow. Forex Factory. Tomorrow is ADP employment change. 8:15. News. News. CME Fed Watch. Probably push into no change with the data that came out today. We've been getting pretty solid data. It went up just a tad bit. Just what I thought. You can kind of tell by how the data come out if this is going to be, or the data surprised, like the CME Fed Watch people. A lot of time the data comes in line. This doesn't move, and it's normal. 78% chance. We keep rates the same. Earnings tomorrow. On Wednesday. It's quiet on the earnings tip. But earnings season for big tech is right around the corner. Dollar on the daily. Okay, we hit the target. We didn't close below it. I want to see some type of retracement here. Right here, I'm patiently waiting for a retracement to sell. So I'm still sitting on my hands over there. Nothing on EU or nothing. So we had a down day. This high is left. High of the day. Smack new week, open the gap. And this is Friday's low. So we got our buys here, but it wasn't pretty. We got the buys where we were looking for them. Where we were looking for them. Under Friday's high. Price delivered shabby though. Shabby. After we hit DOL, we slowed down dramatically. See what the weekly did. Weekly's kind of like at a standstill. Like, all right, I took all-time high. What you want me to do? Weekly Pando took all-time high and just been chilling ever since. Let's go to the daily. Okay, so this is done. We close through this and we smack this. This can be done. Question is, did we get a good setup off of this? Let's look at the hour. So where's that high? That Friday's high? Right here. This is Friday's low. So we came up to this high here. 9 o'clock, we pushed the high. So that was this sale to come down to take Friday's low. So Friday's high did come in handy for this. Note the move from Friday's high to Friday's low. Friday's high was used as an old high level for the sale. Now we got sell side liquidity ran. We should get buy side liquidity delivered next. So if we're gonna go high, we should go higher from here because we tagged this. This doesn't look, however, this doesn't look like this is done. We haven't retested any of this. This will be the candle. This will be our mile marker here. After we close past this level, we closed this level first here, but then we closed here. We used it. Means buys above here is okay. Any cool array. Buys above here, get interested. This don't look like it's ready to turn around just yet. It still looks like lower prices. Hold up. Okay. This doesn't look quite bullish from the 4 hour. It looks like we can use this low and re-sweep it and get better displacement. I think a buy setup will be from a stronger displacement. And this could be a fake out move to trap early buyers. Let's go to H1. How we kind of just chopping. Yeah. Friday's lowest was nice though. How we got there, not so clean, but we here. We're kind of consolidating here. Bare minimum. Buys below here. Just to get out the early buyers or to kind of induce them. 22,632 is my target. And where I get interested is retrace the premium or we get underpriced. It needs to be far away enough for my target to even be worth it on a trade. Can't form fit the trade location. That got to be planned out too. First swing to the low at 22,632.25 will be my first target. And that and anything below it would be areas to hunt for sales. Alert said, news tomorrow, I won't push it. But if we in a good trade location, I will watch and hunt. As far as swings, we have to buy into the low. That big beautiful bill is past too. Well, it's basically past. This would be fair value for buying. And sells above here. Fair value for selling. That's the bare minimums I need. All right, that's that on that. Pretty much done. All right, y'all. Y'all have a good day. Peace.